Hi, it's Paul Brown here from Wealth21. I hope you're all keeping well. Just put together a presentation for you just on the containment measures for the coronavirus outbreak, the impact on the economy and the markets. So moving through, firstly, it's important that anything in this presentation is only general information based on data that I've gathered. It's not advice, so if you've got any specific questions on your current financial position, please feel free to give me a call. So looking firstly at the new cases in Australia, this chart shows that the new cases across Australia are actually for the last 6 days or so to yesterday, the last 7 days actually have been below 50. So Australia as a nation has done quite a good job in terms of containing the number of new cases. This next chart shows the active cases, and this blue line here is the total number of cases. This maroon line here is the number of people that have recovered, which has been growing steadily over the last couple of weeks. And we do have a number of deaths, around 70 at this point, mostly older Australians. So the number of active cases, given that we've had quite a number of people recover, the number of active cases is actually reduced to around 2,300 at the moment, and that of course is taking pressure off our health system. Just looking quickly at some other nations around the world, this is a comparison based on number of cases per million of population, and of course, the ones that are higher up the charts are the ones that we're aware of in the media: Spain and Italy and France, and actually Switzerland actually has a high number of cases per million people as well. Australia's down here with South Korea and have managed to contain the number of cases quite well. One of the interesting ones to look at here is Singapore, because for many weeks Singapore had kept the outbreak under quite good control, but just over the last week or so they've had an increasing number of cases, so it's almost as though they're having a bit of a second wave through Singapore. So this chart here just shows a comparison of Australia, South Korea. I've showed this chart before, but we have a very similar trend to South Korea in terms of how we've managed to reduce the new cases, which is good. And this next chart just shows a comparison of Italy against the United States, and again they're pretty similar trends. When the outbreak really started to take hold in the United States, it increased quite rapidly, as we saw in Italy. In both cases, though, they've managed to flatten that chart out. Turning now to the economy, we did have some employment figures out last Thursday, which showed the employment rate increased to 5.2%. However, that hasn't really taken into account the real impact of the restrictions yet. So this is an updated forecast from Trading Economics, and it shows that the unemployment rate for Australia could increase up above 10%. And I think most economists feel that we are looking at a double-digit unemployment rate in the next few months or so. This next chart is GDP growth for China that came out last Thursday, and it showed that in the first quarter of 2020 their GDP growth was negative 6.8%. We expect negative GDP growth in Australia and many other countries around the world as well. But that's the China figure and the first, the real impact of the economy of the outbreak. So turning now to the markets, firstly Australian shares, we did see that I think it was about 38% fall in the Australian market from about the 22nd of February through to towards the end of March. Then we've seen a 26% rise since that time as well. So there's still up and down days, but we are seeing a recovery in the markets. This next chart is actually looking at Australian listed property, which is typically shopping centres, commercial office buildings and things like that. Now this section of the market did fall very rapidly when the correction started. Again, we've seen some sort of recovery here, but this is a very significant fall, actually much greater than the broader share market. And this next chart I have is the healthcare sector. Okay, so it did also fall and recover, but you can see over a 12-month period, this section of the market is still looking in positive territory. And the final chart we have is the 10-year bond rate, which we've been looking at the last 2 or 3 weeks. Currently the bond market is a bit below 0.9% at the moment. Has settled down into that area. We've got liquidity in the market because the Reserve Bank is buying government bonds, of course. So there we have an update on the impact of the coronavirus on the economy and the markets. If you've got any questions, please feel free to give me a call. We're generally in the office. Feel free to email though. We've always got a couple of people here. Look after yourself, and we'll catch up with you soon. Thank you.